Does it show anything on your end that it's recording?
Recording started. Yeah.
All right. So Aris Avalos with the Mortgage Phoenix Group. How are you?
I am doing well. Doing well here at my headquarters in Rancho Cucamonga.
Yeah.
Yeah.
So tell me, anything new in the mortgage industry? I heard about this thing called the link.
Yeah. We were talking a little bit about it, and I wanted to bring it up simply because I think it's a great program for those who are not quite ready to get into a home simply because they either have a bad credit or maybe they're waiting for their documents. I work with a lot of Latino, a lot of Hispanic clients, and oftentimes we find them that they have their paperwork in the works and they have an I-10 and this loan works for all sorts of scenarios. So it's really for that individual or family that is not quite mortgage ready, but they're interested in buying a home now, right?
Mm,
And they have saved their money. It's just that for whatever reason, you know, they're not quite mortgage ready because of their credit, because of their documents, because maybe they started a business or something like that, and but they have the means to basically pay for a mortgage, and they have the financials to be able to make it happen. So it's
God.
for that type of individual.
Okay. So it. How is this compared to interest? No, not interest only. Stated income.
Yeah, so there's really no true stated income in today's market, right? There is bank statement loans, there's 1099 loans, there is self-employed loans, there is loans that require less documentation, and I guess that's kind of like where the stated idea comes from. But this loan is backed by a government entity, a government institution, right? And if you've heard, and I know you're in the industry, Rico, and you probably heard of I-10 loans with 20
Hmm.
or 25% down, right? Requiring lots of conditions, lots of guidelines to meet. This loan works for I-10s. It works for DACA recipients. Oftentimes, you find DACA recipients for those that are came here at a very early age and were able to get their work permit and their ID through that DACA basically program, right? But perhaps maybe they haven't saved enough, or maybe they feel that there's no options available out there for them. This would be a good option. This is also a good option for those that perhaps are working a W-2 job and they said, "Hey, I'm gonna go work for myself and start a business and whatever they're doing, and they're fairly new to their business, and they don't have quite the financials or the income reporting to be able to qualify for a traditional loan, right? So your traditional loan is Fannie Mae, Freddie Mac, VA if you're a veteran, FHA if you're backed by the government and stuff like that. Yeah, so those will be your traditional loans. So this is a little bit in a way untraditional because this loan
Mm,
allows for 1099, self-employment income, multiple streams of revenue. So if you're doing, like, let's say Uber or
right.
Lyft, or if you have a business on the side, doing landscaping or whatever, right? The whole idea is to be able to source what you're making. So if you're not depositing this money in your bank account and there's no history of you cash flowing or or making income, this loan may not be for you, right?
Mm.
Yeah.
Is do you suppose is the bank gonna ask for 2 years of money coming in, deposits, any type of a traditional loan? The
Hmm.
bank asks for like 2 years of bank statements, right? If it's
Hmm.
bank statement loan.
Hmm.
If it's a W-2 loan, a traditional mortgage, they ask for like 3 months back.
Right.
Is it what are the requirements? So I come to you to
Yeah.
get this link loan, right? Because
Yeah.
I have the funds. Okay,
Hmm.
my credit is not always there, but it's
Hmm.
there. some legitimate reasons why I have some 30 days, even 60 days late, right?
Right, right,
And anything can happen. So everything on paper makes sense. Okay. So if somebody comes to you, when do you categorize this person to say this person is better off with this?
right, right. So yeah, so this loan, first of all, you got to meet the qualifications, right? 600 minimum credit score. The government is or the loan is backed by a government entity. So let's put it to you this way, right? So
Yeah.
if you don't qualify for a traditional loan because maybe your credit is not quite there, or
Right.
maybe you started that business, right, that you don't have 2 years of taxes, like you mentioned, for self-employment, you need 12 to 24 months of business bank statements, right?
Okay. I'm
and
listening.
we look at the average deposit to figure out how much of that deposit we can basically use, right? So if somebody is not quite mortgage ready because of their credit,
Okay.
because of their financials, right? Uh,
Right.
and because they just don't have the credentials that will meet the credit requirement, the income requirement, the employment requirement for 2 years, the reserves required, right? Banks required a for the money that is going to be used for down payment closing costs to be in your bank account season for 2 months, right? And then the other requirements like that will qualify you for a traditional loan, meaning that you've met all the requirements, right? So
Right.
this loan is a loan in which it's called a link loan, and the loan is backed by a government entity or a tribal entity, right? So
Right.
essentially, let's say I'm the applicant, and I don't report enough income on my taxes. I just started my business, but I have a good amount of cash flow coming in. I have a good amount of
Okay.
sales, a good amount of deposits, right? And because of that cash flow and because of that, those deposits, that income that is not traditional, right? Because a deposit doesn't yield to this is how much I made, right?
Right.
Deposit is really, hey, these are the amount of sales I'm doing, right? So,
Okay.
so
So
the
I'm making this list. I don't know if you see it there.
I see it, yeah,
Okay. So the link loan requirements is 600 FICO.
yes,
And what
right.
else?
You make a financial agreement
Financial.
with a government entity. Okay.
Okay, hold on.
hmm
Financial agreement.
Financial agreement, right?
Agreement with
Government
a
entity.
government. And who is this government entity?
They're
Entity.
tribal entities, and depending on the area that you're buying, they may be backed by XYZ tribal, entity. And
Okay.
essentially, the agreement is for 40 years.
For how
With
many?
40 years, 40.
Oh, so this is not a 30 years.
No, no. So let me explain that. So the financial agreement is made with the government entity who's going to be qualifying for the loan, right? And
Yeah.
so the loan is backed by FHA. So,
Yeah.
so the government entity, the sponsor, let's just put it as sponsor, right? The sponsor is
So it's
qualifying for
backed by FHA.
is backed by FHA. It's backed by FHA. So the sponsor, which is the government entity, is qualifying for the loan,
Uh
right?
huh.
You're making a financial agreement as a customer with the government entity, right? And that agreement is for 40 years, right? So it's a financial agreement between them for 40 years. The government entity is the one that's applying for the loan with FHA. And as we know or may not know, FHA is an insurer of mortgages, right?
Right.
So they're the government, and essentially, basically, what FHA is, they're going to ensure that if something were to happen to the loan and the bank had a loss on the loan, they will cover whatever losses the bank had in the event that the buyer or customers stopped paying the loan, couldn't pay the loan, or got foreclosed, right? So
Yeah.
FHA is just an insurer of mortgages.
Okay. How many people can apply for the loan?
Good question. So with this loan, there's two people that can apply for the mortgage, right? And you're not limited to what they do, or you're not limited to if they have documents or don't have documents. This loan is for ITIN, DACA, self-employed, gig workers, right? If you're driving Uber, doing Postmates, driving Lyft, right? Maybe you have a
Hold
catering
on.
business.
Hold on. You're going too fast. I-10
Oh,
DACA, self-employed.
yeah, gig employees, like the
Okay.
gig economy, right? I got a gig, so hey, I'm doing Postmates, or hey, I have a taqueria or a catering business on the weekend, right?
Yeah.
But remember, the whole thing is that we're gonna review the last 2 months of earnings, right? So you cannot have a business, or you cannot be doing any kind of gig work and not document it, right? If you're getting paid cash, great for you. That's awesome. But if you don't deposit that in your bank, and or you don't take Zelle or Venmo, or or Cash App, basically, right? And you cannot show how much your business is making, then this loan is not going to work for you, right? Because it focuses on the last 2 months of bank statements to show what kind of cash flow you're doing, right?
Okay.
All these times.
So
Uh-huh.
so they could be getting paid cash, but it needs to go in a deposit to make it legit.
Right, because even if you're a cash based business, right? And let's say you're doing you're doing whatever, you're selling tacos on a
Yeah.
weekend, right? And you're getting paid cash, right? And by the way, most taquerias, most caterers out there, most tacos,
Yeah.
they're taking Zelle, they're taking Venmo, right?
Yes. Cash App.
A Cash App. They're capitalizing on
Yeah.
the fact that we're cashless now, and they're doing it. So there's no reason why you can't channel a Zelle or a Venmo or a Cash App through your banking, right?
Right.
But if you get paid cash and you want to keep it under wraps, or you want to not report that on your taxes, that's on you. But the unreported typically are the ones that don't get the benefit of any ownership or home ownership, simply because if you don't report it to the IRS, or if you don't file income taxes, it doesn't, it benefits you by not paying taxes. But when it comes to purchasing a home, as you know, Rico, you have
Yeah.
to document, right? Everything is documented these days. All the buyers are basically buying out there are documented, that they can pay the loan, basically. So even if you're getting cash and you have a cash basis business, um, it doesn't discount you from not qualifying. You just basically have to explain that, hey, my business is cash basis. Here's what I deposit, right? And it's probably hard for somebody to deposit their cash, right? Because let's face it, you're probably not going to pay any income tax on that. But we're
Okay.
talking about the people that are, collecting Zelle, Venmo, Cash App, anything that you can document electronically, that
Okay.
you're basically are earning income.
So this is music to a lot of people's ears. But another $1 million question is because I try to put myself in the consumer's shoe,
Yeah.
and some people know what to ask, and a lot of people always miss the important questions,
Mm-hmm.
right? Uh, Everybody's gonna love this. A lot of people are gonna love this.
Mm-hmm.
The question is, I-10 people. There's a lot of people in I-10, DACA, self-employed, gig, cash. They're gonna love it. However,
Yeah.
are you guys gonna require to see taxes?
That is a good question, and the tax is required to be shown. That and if you're a W-2 employee, right? Even if you're working I-10 or DACA, you're getting a social that is backed by a work permit, right? So yeah, it does require the last 12 months or the last years of taxes, simply to make sure that you file basically some income, right?
Right.
But if you're self-employed, for instance, right? the requirement is to see that you filed an income, right? They're not going to average that income. Let's say that income is 20 or $30,000, right? They're not going to take that income and be like, oh, well, you only made $30,000, and that's how much we're going to base the numbers off of that, right? No, they're going to base it on the cash flow analysis of the last 2 months, right? So if you're cash flowing $20,000 a month,
And
and
it's
for the
all
last couple
cash.
of months, then the numbers will be based on that. The numbers are not based off of what you reported on your taxes, because you got to remember that you're the customer to the sponsor government entity. The
So
bar, Mhm.
no tax return required, right?
It is required,
It
not
is.
it is required, but it's not looked upon as the firm income or as the income that's being used.
Okay, so taxes are required, but they're not a deciding factor. My
Yeah, they're not a deciding factor or an average of what the actual earnings are, right? They're more of um, making sure that you file something, right?
yeah. Okay. So taxes are required, but not a deciding factor.
Hmm.
Okay. I-10 DACA self-employed cash only business documentation. Um, so if so, you say two people can apply for the mortgage.
Yeah, up to two applicants per loan, and they can be a variation of, hey, one is I-10, the other one is DACA, or one is has a work permit. I mean, has a residency, or it could be a citizen. When you have a mixed use of applicants, right, with their qualifications. So if I'm I-10, but my partner is born here and has it has legal legal rights to be here, right, or everything in order, the loan defaults back to the I-10, because all applicants in an application need to qualify with credit and income and documentation, right? So I-10, DACA, gig worker, 1099, self-employed, even those college students, as you know, as of this year, right, as of October, all college loans or student loans came due, right?
Right.
So you no longer are in forbearance or in deferment because of what happened with pandemic and stuff like that, right?
Yeah.
All loans are due, whether you're paying a repayment plan based on income, a repayment plan based on whatever the agreement is. So oftentimes we have clients that are making thousands of dollars in payments on student loans, right? Especially if you have a
Right.
career like a doctor or or engineering or something like that, right? And you
Right.
rack up a lot of student loans. Well, that 1,000 or $1,500 a month in student loans
Right.
is a deterrent from qualifying, because that's a big payment, right? And
Right.
even for some loans, FHA and Fannie, right, where we have a little bit more flexibility of how much of the student loan balance we can use if there's no monthly payment on that credit report, right? Um, you know, um, but when it comes to high student loan debt, that needs to be accounted for a payment, that typically disqualifies that individual, right? Um, with this type of loan, with this link loan, if the payment shows zero on the credit report, Trio, who's the partner on the qualifications, will take the zero payment if there's no monthly payment, right?
Mm.
So there's some flexibility to what you can do going with this type of loan instead of going with a traditional loan where you got to meet all the loan guidelines, right?
Mm.
Here's there's more flexibility. Even on sourcing and seasoning, there's no seasoning requirement on the down payment and closing costs you're going to be using for the purchase. You could have just freshly deposited that money in your bank account, and the bank is the partner is not going to ask you, for where
Where
that money
the
came from,
where the
right?
money came from? Yeah.
Exactly, where Fannie, Freddie, FHA, everybody else is going to be like, okay, well, there's a large deposit over the purchase price. What was that for? Can you document it for me?
Yeah. Well, a lot of these large deposits are people are selling stuff, cars, old gym equipment, yard sales. They're downsizing. They're moving out of state. They don't want to sell. I mean, they don't want to take big furniture items. I know. I do inspections,
Sure.
and a lot of people are moving out of state, and they're not taking gym equipment. They're not taking pianos. They're
Yeah.
not taking above ground pools, which that could be taken. They're
Sure.
not taking stuff like that can be sold.
Yeah.
So what's the maximum loan amount on this program?
Yeah. So it's FHA, right? So the sponsor, the government entity, right,
Right.
is qualifying for whatever the maximum loan limit is in whatever county they're buying,
So
right? So
loan limit is based
it's conforming
on
loan limit based on FHA,
okay.
based on
Loan amount is okay is based on
um,
loan conforming
yeah, conforming FHA limit, which right now is 644, right? Um,
limit
mhm, per county,
depending per county.
per county, right? You got it.
Limit per, I'm writing this thing down so people are watching this. They could screenshot it or whatever they're doing.
Very cool. I like that.
Okay.
Yeah.
Yeah.
So 600
So
FICO, financial agreement with government entity, the agreement for
okay.
40 years. Yep. Hmm.
So 600 FICO financial agreement with the government entity, which is a tribal. The agreement is for 4 years,
Hmm.
backed by FHA. Two people can apply for more. I intended to. Okay,
Hmm.
and okay, so this is to qualify for the mortgage.
Yeah. This is to qualify for.
What's the minimum down payment?
Yeah. So it's 3.5% down payment
Minimum, right?
minimum, right? Minimum three
Minimum
and a half percent down payment
3.5. Hold on, percent
down.
down payment.
Hmm.
Sorry, let's see here. Uh, the hell, oh, hold on.
I think it's the U on the
It's
I.
the you, yeah.
Hmm.
Minimum,
Yeah.
minimum, minute. No, that sounds.
The minimum
There you go, right there. Minimum.
3% down payment. Yeah. And so the way you got to look at this is that, one of the caveats to get this loan is that you have to document that you're paying rent. 12
Okay,
months consecutive rent payment required, right? So
so there's
it
a 12.
month, yeah,
Okay, so there's a 12-month
consecutively rent payment,
consecutively. It's a 12 months consecutive
rent payment.
rent payment with no lates, with no.
No late, no, yeah, and it's one of those things that you can be living with family, right? And you sell your mom $1,000 a month or your parents,
Right.
right? There has to be paper trail. It's got to be documented electronically, or you write them a check. Most of us don't write check anymore. We use Zelle, Venmo, Cash App, right?
How
So
about a letter?
no, it doesn't
No.
work. No, you can be renting from a professional management company, and they may be able to do a rental ledger, right? That shows, hey, this person paid me with a money order or Zelle,
Anything,
right?
anything, yeah.
Yeah. So when it comes to professional management companies, there's more flexibility there because they're a professional management company. They have a
Right,
bookkeeping system. They can write a ledger and say, hey, yeah, this individual lives with me. His rent is on time. He's current. No problem. He pays $1,200 a month or $2,000 a month, right? But
right.
it's not one of those loans or those loan options where you're not going to pay rent and try to get a mortgage for three or four
Okay.
thousand dollars, right? It's just not going to work. You know what I mean? You have
Yes.
to document. So if you're not paying rent, the best thing you can do for yourself, right? If you're living with family members or friends or something like that, is just show a track record that you're paying rent, whether
Right.
it be $1,000 a month, $800 a month, just a quick Zelle, Venmo, or Cash App. It shows a history that, hey, I'm contributing. I'm basically on the books. I'm paying rent, and so The rent or the mortgage payment that you be allowed with this program is 200% of what you pay in rent. So if my rent payment is $2,500, you can make a mortgage of $5,000, right? Um,
Right.
you know, and if it exceed if you're not paying a substantial amount of rent, it's no problem. There's flexibilities as to what it can qualify you for. Um, and
Yeah.
other qualifications on your loan application. But the thing that I want to drive home is that yes, you do have to show that you can pay a mortgage,
Okay.
because you're paying rent, right? So
So so is there two things?
mhm.
One, is there a payment shock that you guys
Yeah, the payment
consider?
shock is no more than 200% of what you currently pay,
No more
right?
than okay, okay.
Yeah.
So can you explain what a payment shock is for people that don't know?
Yeah. So if I
I
pay
mean,
a
I know what it is.
Yeah. So if I pay, $1,500 a month in rent, right?
Hmm.
And the payment cannot exceed 200% of that. So $3,000 would be the maximum on that, right? That you can basically pay on a mortgage. So essentially, 3.5% is the minimum down payment,
Yeah.
but you may need to put more. You may to put 10%, 20%, 25% to meet the qualifications. But if I'm cash flowing quite a bit and I'm paying a rent, let's say of $2,000 or $2,500, right? And I can document it, right? I can afford a mortgage of $4,000 to $5,000, right?
Right.
Most mortgages today are $4,000 to $5,000 on your average home. Let's face it, right?
Right. Yeah.
Your move up homes or homes above 600,000, they may be
Yeah.
$5,000 to $7,000, $5,000 to $6,000, right?
Yeah.
So yeah,
So
so there's some things that you still need to meet. It's not like, oh, we're gonna blindly qualify you for this home. No, you have to show the ability that you can qualify. And there's
okay.
other things that that this loan requires from a customer, right? Where the buyer is the customer, the applicant is the government entity, the financial agreement between is made between the customer, who I'm the buyer, right? I'm the customer. The
Yeah.
qualifying for the loan is the government entity. You make a financial agreement
Okay.
that for 40 years, basically, you're gonna basically be in this agreement with them, but there's no stipulations onto whether you can refinance out of this or sell the house, right? There is a 3-year prepayment penalty time.
So there's a
Yeah,
year hold on
prepayment penalty
3 year prepayment.
penalty for refinancing or selling the home within those 3 years, right?
Okay.
Yeah, and then after that, if you wish to basically refinance it because the rates are lower, if you wish to sell the home, there's no equity share. Whatever equity the home has is yours, right? There was a government program similar to that. You probably heard of it, Dream for All down payment assistance through CalHFA that
Hmm.
was earlier this year, in which they helped you with a 20% down, but they needed 20% equity share
Yeah.
whenever you basically sold the home, right? Which
Okay.
is
Yeah.
really not a big deal. Like, that share equity in that program worked for a lot of people. Some people were turned off by it, but at the end of the day, the government was working with you on helping you become a homeowner and giving you 20% equity, right? So,
Right. Yeah.
sorry, it's giving you 20% down payment, which helped a lot of people. That program had 300 million available in funds, and within 11 days it was done. People had to
Yeah.
use
Yeah.
that program. But this program, there's no equity share. Whatever equity the home builds is yours.
So what's the catch? There has to be a catch.
Yeah, so here there's really no cash, because when I think a catch is like, okay, well, what are the limitations, right? Well, one of the limitations is that you're not going to be on the title of the home. The
They're
government
not.
entity, no. The government entity holds a title on the home, yet you're going to be given every right to direct how you want to manage this home. You in the financial agreement you make, you have the right to sell, refinance, right? Keep the equity of the property, right? But you're not going to be added to title, and you're going to be given direction on how to manage your home yourself, right? Um, and the loan will be reported under your name as well. So it will be taken out by the government entity, but it will also be reported on your name. So you need to make the payment agreement with the sponsor, right? And you have to make that payment on time, right? Because you are going to be reported to the credit bureaus. So
So the
uh,
government entity is on title,
it's untitled. Yeah, the government is untitled, but in the
not
you have an equitable position on the
not the borrowers, right?
not the customer. The borrower is the government entity. The customer is the buyer.
Yeah, not the borrowers. Okay.
Correct. Yeah, and then there's a couple more things that perhaps makes this loan a little heavier than other loans, right? Like with this loan, you have to get a renter's policy because again, you're not on title. They're considering you have a financial agreement, right? Um, there is a renter's policy you need to have. There is a payment protection insurance you need to get. The home needs to have a home warranty on a yearly basis, right? And yeah, those are the other kind of factors that go into this type of loan for someone that potentially couldn't qualify but has all the savings and all the means, right, to get into a home, right?
Mm.
They're just not quite mortgage ready where FHA or VA or Fannie Mae, Freddie Mac can sponsor their
So
or
when you say not mortgage ready, you're referring to the traditional mortgage.
the traditional mortgage, exactly, because
Okay.
maybe they're I-10, and as you know, I-10
So
there's
you know what? This is a great loan, like you said, for everybody that you're talking about because um, many people. How many people have you ever talked to? And they're like, "Well, I got the money. I got the money.
I'm good for it.
I'm good for it." Well,
I talk to a lot of good for it people.
well, I
Quite
got the money. I got the money. Well, okay, fine. Well, let's do this loan. And you know what? This loan is going to be so good for those people in that particular financial situation because it will give them a taste of home ownership to where in 3 years they could refinance it and put that title on their name.
correct. That is
Does that
correct.
make
So
sense?
so yeah. So you're
So it's
you're
pretty much a 3-year probation for the person that pretty much needs a slap in the hand. Okay, you
yeah
get you know you're going
yeah
to pay a little bit more, but the government entity owns it's not its own title, not the borrowers for the first three
right
years. Okay,
right
for the first 3 years, then okay, where you're at, can you buy the house from me? You
right.
know,
So
which
and then
which
another thing I can add, and those are all great points by the way, Rico, and that's the way that it should be approached, right? Because the other type of loans like the I-10, right? They're just as condition heavy, perhaps as not. You may not have the renter's policy, but they're asking you for 20 to 25% down, right? So
right,
take the average home today at a 500,000. 20% is required minimum, 100,000, or if it's 25%, you're being required basically,
yeah,
125,000, right?
yeah,
Down, right? Plus closing costs, plus reserves, and stuff
right,
like that, right? So it can get really financial heavy, right, for
right,
people, right? And yeah, this is your entryway to home ownership
right,
to clean everything up, whether it is credit or bankruptcy or foreclosure or short sale, or hey, I might 10, but in the next 3 to 5 years, I'm going to get my residency here my legal status would be right in order, right? And then at that point, you can assume this loan. You can assume the terms that
Right.
you started with the financial entity, right, with the government entity, or you can refinance the home once you're able to qualify for a traditional
Right.
government backed loan. You know.
Right. And God forbid something happens to the borrower, but on their will it says, my home goes to my children.
Hmm.
Um, how does this affect the title?
Yeah. So
If
so
if
it's
it's if it's still within the 3 years.
Yeah, so the applicants they have an equitable agreement, right, to manage the home how they want to. The title holder is the government entity. So whatever arrangements they have with a will or living trust, right, they can incorporate this into their
So they could do whatever they want. They just don't hold the title for the first 3 years.
right. Yeah. So it's as
And
simple as that,
so
right?
yeah, so it's I guess I guess it's kind of like the way I would understand it. It's kind of like, you as a parent are helping your kids buy a car, and then, hey, once you pay it off in 3 years, I'll give you your title. Then you can do whatever you want with it. Does that
Sure.
make sense? And
That
the
makes a lot of sense. It's like,
So this is very, very, similar to that, to where the government is helping borrowers that are, I got the money, I'm good, I got money. Um, and so the government said, okay, well, let's do this, and but they just hold title, which is
right.
just, well, they're on title.
Yeah,
Okay.
the sponsor government entity holds title. You're still being report the loan still be reported on your name, allowing you to basically build credit history
Yeah.
in a much stronger credit score, right?
Yeah.
Um, you can decide what you want to do with the home. Let's say you bought this home and you did an addition on it, right? You did an ADU unit, or
Yeah.
you completely remodel it, right? Or you expanded on it, right? And now you bought a home for 500 that's worth $700,000, right? Well, guess what? That additional $200,000 is for you to keep. They're not asking you for
Yeah.
any of that equity. You still have basically an asset, right? Which we know how much assets these days cost with homes and cryptocurrencies and stocks and
Right.
stuff like that. You're being led into home ownership, right? And you have a path to home ownership that in the future
Right.
you can basically assume the mortgage,
Yeah.
refinance the mortgage, sell the property, right? Where in normal circumstances you wouldn't have that option, or you may not be able to qualify for that, right? Again, it's just a way of kind of easing yourself into homeownership to become mortgage ready for you at
Mm.
one point to assume, refinance, sell the home, and have all the rights of getting into a owner's
Right.
position rather than being a renter for the
Okay.
rest of your life or whatever.
So how can people get a hold of you? I put your name down over here. Aris
Yeah,
Avalos.
yeah, it's 626, if you can, 488-3640. That's my number.
Okay.
And yo hablo español, yo hablo inglés, right? So bilingual. And I can fill you in on all the requirements, of what it needs, and more of the details. But the biggest thing was, it's a financial agreement, right? You're the customer to the government entity, which is the sponsor. They're the qualifiers, right? Minimum 600 credit score for first-time home buyers. You can also be a second-time buyer. You'll be required a 700 credit score, and if you're self-employed, you're going to be required, and all your income derives from self-employment
Yeah.
activity or independent contractor activity. Your minimum required is 660. You do have to document rent. So if you're not paying rent, my biggest advice to you is to start basically showing it through Zelle, Venmo, or
Right.
Cash App electronically, so that you can basically show the ability or pay it through check. A lot of us don't write checks anymore, but that's
Right.
a good option.
Okay.
Um, and you need a minimum 3.5% down. You maybe require more than that depending on your financials and your income and stuff like that. Uh,
Right.
and the rates are going to be comparable to what an I-10 rate may be, and I can quote those for you based on what the program has, without really going into what monthly payments are going to be or what APR, right? But the
Right.
rates are going to be anywhere from 9.6 to about 10.3, and it is a 40-year financial agreement that's made with the government entity, and so and then.
Well,
Mhm.
technically, it's high, but okay, it's high, and many people are gonna just in their mind it's 10%, ten
Mhm.
percent. But put that 10% into the stock market, you're not gonna get the money back as you would in real estate equity.
Right, right, yeah,
Okay,
yeah.
Bitcoin is gone. Bitcoin is gone. I mean, the inflation right now is, you know,
Mhm.
bad,
Yeah. So
but the real estate is chugging along, chugging along.
mhm.
I haven't seen, well, I haven't seen, I'm not
Yeah,
saying it hasn't happened, but there was a time where, realtors were posting, oh, I got this house to my client $20,000 below market,
yeah,
$20,000 under asking. Or it's like, no, you're seeing, hey, I got my client 20,000 above asking. I
right.
got, so So people, the 10% that you're paying in interest, you're getting it in equity 10 times more.
Yeah, absolutely.
Does that
And
make sense?
it does make sense. And the way to look at it is like, real estate is steady, right? Simply because there's not a lot of homes available in the market. If there were more homes and the rates were more favorable, there will be more transactions. There will be more
Yeah.
sales, right? But those who can qualify should buy a house if it makes financial sense, for their current financial situation, right? And we can discover that through analysis, right? But real estate is actually, is the golden basically ticket to financial wealth, financial freedom, right? As you mentioned, Bitcoin, took a big dip, after November of 2021. It was down in the 20s and 30s, in the last 18 months. And the stock market is really volatile, right? Yes, if you hold the money long term, you'll get a great return based on what the statistics say. But real estate right now, for the last 12 years, last 11 years, since 2012,
Mm.
since that period of time that real estate corrected itself through legislation, through people that are buying real estate need to show the ability to pay back. Prior to this, it wasn't that way. Rather, there were so many loan
Mm.
options and very exotic loan options that your statement about stated income. There were a lot of options back in those days, back from 2003 to 2007. And so
Yeah.
all that's been cleaned up. The foundation for financing is way more stable here. You talk to any real estate professional, the problem is that there's not enough homes. Even right now, even in this climate, this fall season, going into the winter, basically, things tend to slow down. Inventory tends to grow a little bit more, right? And,
Hmm.
and prices may come down simply because people who are selling, they need to sell. People who are buying, they want to get into home ownership, right?
Right. Yeah.
But yeah, you have very much a stable market that continues to appreciate even through tough times of qualifying for a home, right? So
Yeah.
yeah.
Well, Aris, this is a good information. We did talk about it. We did make a good list.
Mhm.
Obviously, there might be more, but these are the 12 more very important items, requirements. So I hope people are paying attention and they take a picture of this and they get a hold of you.
Yeah.
And no, this is good stuff, man.
Yeah, yeah, and I think that this allows those who could not qualify, right, because of credit, income, um, underreporting,
Right.
taxes, just started a new career, just started a new job, or just started a new
A, a,
business,
a side hustle, a side
yeah,
hustle.
side hustle, a gig employee, right?
Right.
The opportunity to get into homeownership
This
and
is it.
start building wealth for themselves and own an asset, because I say this very lightly, but assets, real estate, gold, silver, Bitcoin, cryptocurrency, right?
Yeah.
These are the things that are going to separate you from those who don't have assets.
Right.
And as we get into a recession and a correction here,
Hmm.
these assets are going to continue to go up simply because
Yeah.
through tough times, real estate continues to hold its value, right?
Right.
Out of
Yeah.
the last 71 years, and since they've been tracking property values,
Yeah.
it's been about 7 years in which real estate was either flat, has gone down a little bit, or remained the same,
Right.
right? And I don't know. I've been in the real estate market since 2000. I've bought and sold multiple homes. I own real estate. This appreciation period that we've had, because of the way that things are had happened in real estate with
Mhm.
supply and demand, has been some of the best times to own real estate. So
Right. No, no, this is good. This is good. I really appreciate your time.
yeah,
I really appreciate that we're talking about this because last time when you mentioned it, I'm like, man, we gotta make a video on this.
yeah,
I think this is
absolutely,
very
yeah,
important. So,
yeah,
well, hopefully, people will get a hold of you. Aris Avalos with the Mortgage Phoenix Group.
yes, sir, yeah.
Yeah,
I love to connect. Share, maybe some more strategies with how we can make this work. And even if you're the client, the consumer is not completely ready, we don't discard them. We
yeah,
put a path of action together to be able to get there. And if you can do your part, I would certainly do my part to help you
yeah,
and make sure that you get into a home if that's what your goal is. So yeah, so information there. Feel free
yeah.
to call me or shoot me a text. I'd be happy to schedule an appointment.
Absolutely, absolutely. Okay, let me stop this recording.
Yeah.
Hold on. Thank you, Aris. Hold on.
Thank you, guys.